AVV Nation, all of YouTube, what's going on? It's Patrick with VectorVest back with you once again to start your week off right. And today I've got 3 earnings plays that I'm keeping my eye on this week that you should probably keep an eye on as well. So if you're ready to see what plays those are, make sure as always smash that like button, subscribe to the channel if you're not already subscribed, and without further ado, let's get right into it here today. Alright, welcome back. So this time we're going to start off inside the VectorVest 7 software, and I want to make sure any user or potential user is aware of this functionality. And inside the viewer section of the VectorVest 7 software, on the left hand side we have the events viewer, where you can find dividend X dates, dividend pay dates, and also earnings dates coming up in the near future. So what I've done is I've gone ahead and changed my time frame for this week specifically. And I've gone through and cherry picked a few candidates from these lists that show potential opportunities here for the week based off of earnings calls coming up this week. So without further ado, let's go take a look at the candidates here. So I'm going to go ahead, jump into the watch list viewer and choose my earnings plays over here on the left. And we've got 3 stocks that I'm keeping an eye on. 2 are fairly conservative, pretty straightforward plays. 1 is going to be the one I'm really keeping an eye on because it's more aggressive to speculative, and we'll talk about the reasons why in just a moment. So first and foremost, the very top stock inside the VectorVest system based off of this list that we have here is AutoZone AZO. And as we can see, we get the basic information such as the price, the dollar change, percent price change, the bid and the ask, and then we get to the value. Now, the value is something unique here at VectorVest that you're not going to be able to find anywhere else. The value is what we currently feel the stock is worth, and the way we use the value is we compare the current price of the stock to its value. So for AutoZone, for example, the price is a little bit over its value, so therefore that makes AutoZone a little bit overvalued currently. After that, the next 4 indicators we're going to take a look at are all cast on a scaling of 0 to 2, and above 1 is good and below 1 is bad. That's as hard as you need to make it within the VectorVest 7 software. So the first indicator we look at is the RV or relative value, which is looking at the long-term potential of the stock over the next 1 to 3 years. And as we can see with AZO above 1 tells us the stock has great long-term potential over the next 1 to 3 years. The next indicator is the RS or relative safety, which is looking at how much risk is involved with this stock compared to the average stock out there. So since it's above 1, that tells us there is less risk associated with the stock currently. And then third and foremost, the RT or relative timing, which is looking at the short-term price trend of the stock. And since it's above 1, that tells us this stock is in a pretty steady uptrend currently as well. So to break it down, the stock has great long-term potential, less risk associated with it, is in a steady uptrend. So overall, the VST rating, which is a combination of those 3 indicators, tells us this stock is favorable on both a fundamental and a technical basis. Now, taking a look at the second stock, we can see Costco. It is currently overvalued. It has about average long-term potential, but pretty solid balance sheet. I think we can all agree upon that. So therefore, the relative safety is above 1, telling us less risk associated with it. Looking at the timing is a little bit below 1, but with an earnings call that shows good results and good forward guidance, that could easily change in a matter of a day or 2. So I'm keeping an eye on that RT, but with a good earnings performance, this could definitely push that well above that level of 1. So overall, the stock is still favorable. And then the third is GameStop GME. As we can see, it is currently overvalued. This one, a little bit more speculative since it has poor long-term potential, does have more risk associated with any average stock out there, and it is in a steady downtrend currently. So overall, the stock is not favorable. Now, the reason why I have this as my speculative play and the reason why I'm keeping an eye on it this week is if you've been following along with the GME saga and you followed along with the earnings calls, Matt Furlong, the CEO, did mention their focus going forward after last earnings call is going to be profitability. And so it's going to be interesting to see if they can surprise the markets and have a positive earnings call and a positive EPS number rather than the negative EPS number that the forecasts are showing for. If they can beat that, you could expect to see a pretty big pop most likely coming into GME, especially with all the news around it and knowing that there is about 30% of the stock's float, the entire float, locked up in individuals' names through the direct registration system. So overall, the stock is not favorable, but once again, an earnings call can quickly change the direction of a stock. If it's positive, can also go the opposite way if it's negative. So you got to be careful whenever taking advantage of earnings plays. So now that we've covered the analysis, let's go ahead, jump right into the graphs and take a look at the chart. Because as we always talk about, a picture is worth 1,000 words, and a chart is basically a big picture of the stock. So we'll go ahead and graph them all here. And starting off with AZO. So what we show is the price shown in candlesticks, and it's showing pretty favorably right now since it's moving from bottom left to upper right, which is what we advocate for. Then below that, we have the stochastics, which shows overbought and oversold conditions. Below that, we have the MACD, and then below that, volume and earnings per share. Now, obviously, looking at earnings plays, earnings per share is definitely going to be a crucial indicator. So as we can see, earnings are steadily rising from bottom left to upper right, like a stair-step pattern, and that's exactly what you want to look for typically whenever getting into any sort of stock. So, AutoZone, I'm going to go ahead, toss on the earnings calls, and as we can see, we have had some pretty decent results after earnings calls over the last year, so therefore the probability is on your side that the company will most likely beat earnings, will have some positive results. It's really going to depend on what their forward guidance is going forward. But as we can see, we've had one pop right after earnings. Stocks continue to rise. Second time, third time we got a nice pop. Fourth time we had a little bit of a pullback before we started rallying up to this most recent high. And now we're kind of plateauing. Now, one word of caution I will point out here with this stock is if you look at the most recent run up here from about the 1st of November till currently, we can see price clearly hit a higher high, but stochastics didn't confirm that higher high. Also, MACD hit a lower high, so therefore setting us up for a potential bearish divergence and giving us some caution going forward. But we look at the earnings. Earnings are solid. Don't have any doubt that we won't see an earnings beat, but it's really going to come down to that forward guidance. If forward guidance could be positive, we could see AutoZone continue to rocket up higher, and we'll see that MACD break that bearish divergence, and we'll see it continue to rise. But if that forward guidance is negative, we could see a pretty significant drop here with AutoZone. So therefore, if you're taking advantage of options, puts could be a viable strategy, or some type of straddle or strangle. So that way, if it has a big swing higher or lower, you make money off of it, but if it doesn't move anywhere, then you have some more risk associated with it at that point. So that's our first one. Moving on to the next, Costco. Costco has been in a steady decline here over the last 9 months or so, but their earnings are steadily rising, telling us the company is not only making money right now, but also expected to continue to generate huge profits at least 12 months down the road. And as the old saying goes where money grows. Also, if you look at some of the other stocks in that industry, they've all had some pretty decent results. So therefore, with this sell-off that we've seen most recently in Costco, yes, it's overvalued, but looking at stochastics, it tells us that it is getting to an oversold condition. But as always, one thing to note is just because a stock is in oversold territory doesn't mean it's going to reverse and move higher immediately. So just use that as a sign of caution, but this does suggest that there is more upside potential currently than downside risk. So with earnings coming up in just a couple of days, this could definitely be an interesting one to keep an eye on. And then last but not least, we'll take a look at our speculative play, GME. And I have some trend lines. Let me go ahead and clear this up a little bit. But one of the things I'm looking at with GME right now, you have a channel that it's been trading in fairly tightly for the last few months or so. I'll use this horizontal line to put the lower end. So you have a lower end of roughly 23.81 and a higher end of roughly 28.50. With a positive earnings result coming out, let's say Wednesday after the market closes, that could easily push us above this level of 28.50, which we have failed to actually close above over the last 3 or 4 months or so. So if we can close above that level of 28.50 after that earnings performance, if it is positive, that could create a new big run. And as we've seen with most runs with GME over the last year and a half, 2 years roughly, whenever it starts to move, it moves extremely quickly. So therefore, there's a lot of potential money-making opportunities to be had here if we can see a positive earnings. But as I stated, this is more of a speculative play. So if you do take this, make sure you have some sort of plan set in place to keep yourself protected and keep your risk minimized as much as possible. But looking at earnings have been steadily moving lower. But on a positive note, right before October, we did see a slight uptick. And this is kind of telling because our earnings per share, once again, isn't just a forecasted earnings per share that shows the most recent data. This is also blended with a forecasted 12 months earnings per share as well. So when you see this uptick, that tells us the analysts are expecting to see GameStop's earnings potentially starting to rise again. And that could be the catalyst that gets GameStop stock going higher again. So this is going to be my interesting play that I'm going to be keeping an eye on. But as we can see, after earnings, you've had one miss, stock fell. After the middle of the year earnings right around March, we saw a nice run up. The third one pretty much moved sideways, but slightly higher, just took a little bit longer. The fourth one really started setting the range for this channel that we've been in. So maybe this one could be the one that we finally see the breakout. But once again, this is pure speculation, so take that as you will. So on that, that's going to be it for me today. Let me know down in the comments below what your favorite pick is. Are you going to be taking advantage of these? I can't wait to see what you guys have to say about it. So thank you very much for tuning in. I hope you have a great rest of your day. And until next time, take care, adios, and toodles. Yeah.